But let's welcome on board Sandip Sabharwal as well. Sandeep, hi, afternoon. Tell us how your travels were and, given that back home, the thrust in India is all about infrastructure. How long before we hit the European or the US levels?
Aisha, travels are always good. I think relaxing, driving on the roads all across Europe. So I think for India to get there, it's a couple of decades at least. I don't think we're going to get there as fast as most people think. I think those people who think that we are doing very well are those actually who haven't gone there. So I think that's how it is. But I think that's on that. Overall, I think markets are showing some sorts of signs of fatigue after the sharp run-up of the last quarter. And that is natural that markets stagnate at some time. The longer the consolidation goes on, the better it is normally for the markets. So I think there's nothing wrong in that. Result season this time becomes very important because of the sharp run-up we've seen across stocks and sectors, and as such, wherever there are the valuations are very high and there are result disappointments, we could see sharp sell-offs.
So where do you think expectations are high and we are in for a potential post-number sell-off?
I think where valuations are high, expectations are high, are all the defense names, infrastructure names, capital good, etc. So I think that's where I think if there are disappointments, we could see some sort of sell-off coming through. Where expectations are low are consumer stocks, technology, etc. So I think on the flip side here, if the result delivery is better than expectation, then the up moves could be more than potential down moves on any sort of disappointment.
We have TCS numbers today, Sandeep. While you can say that was one company which did better last quarter on a relative basis, not on an absolute basis. Do you think we are in for a mild surprise from IT, or the stress in the business will continue?
I think we've just seen Tata Elxsi results, so where despite moderate expectation, the results are actually even below those moderate expectations. Now, TCS expectations, I think, are quite moderate relative to whatever the overall order book is. And to that extent, it will be tough for them to disappoint. That's what I think. But we don't know how the overall discretionary spending environment is. It was under stress, but I think the environment could have somewhat improved last quarter. So it'll be interesting to see if there are some signs of turnaround.
Okay, let me also get on board both Kunal and Naresh and get a sense of the technicals as well. Kunal, hi, afternoon. Seems like yesterday was quite that one-day kind of shake-off. Today we seem a lot more stable.
Yeah, I think the intraday recovery seems to be a lot more better, stronger this time around for the bank index. And I think it's more of a broad-based recovery today, because I was looking at the market breadth, even in the mid-session around the 12 noon, and the market breadth started to show signs of improvement in the first couple of hours after the index went into a further corrective mode. So I think Bank Nifty at one point was sub the 52,000 mark. We've managed to recover quite well, even though there are no major signs of recovery across many large cap names on the banking side. So it's not as if that large cap banking stocks have shown signs of a positive recovery or move for themselves, but it's small bits of everything which is helping the Bank Nifty to try and get into that recovery. The Nifty is holding on to that 24,000, 24,200 key short-term pivot support for itself. So I think that's another plus point to look out for. But I think today when we look at the kind of stocks which are recovering, the kind of stocks which are making new highs, 52-week highs and fresh lifetime highs for themselves, it just gives a sense as well as an indication that markets are now getting into much more stock specific rather than more of a generalistic or sector specific moves which we were accustomed to over the last many weeks.
Tech Mahindra, TCS, Infosys. These are the ones where you could see some rate of change. With TCS, could they build on what they delivered last quarter? Will the string of disappointment continue from Infosys? And has the new change of guard, could that be effective in the case of Tech Mahindra? These are the three factors which in a sense are going to be important. There's interesting news I was reading in the morning, which is that HDFC AMC has decided not to take fresh SIPs in their defense mutual fund, in their defense scheme. They've come out with a defense fund couple of quarters ago, 2-3 quarters ago, and they've decided not to take fresh inflows there. That's what I think I remember reading in one of the media reports. Sandeep, when AMCs who are always hungry for AUM, when they decide not to take fresh inflows, it just tells you either it is high valuations or lack of opportunity.
It could be both because then all of us know, Nikunj, that the number of names which you can play on the defense team are very, very limited. Most of them come from the PSU stable, and many of them now trade at valuations of 60 to 100 times earnings. Now, in this environment, it's a good move to possibly stem inflows, but then people have the option of going and buying directly, and there are enough, I think, uh, kind of small case portfolios, etc., lying around which focus on this theme. So I don't think inflows could stop in this way unless and until there is a sharpish kind of correction, which will happen at some stage because the valuations have become unsustainable.
Right. Okay, that's the take coming in on defense. Let's address some of the buzzers as well in trade. And while you've got an HP, ONGC holding out very well, Naresh, I want to come to you on three of the smaller plays. Sun TV, India Cements. I mean, Polycab not as small, but yeah, still holding up a good 3.5%. Anything on these three charts? Anything where you think there is still further headroom to go and one can go long on?
So Sun TV looks interesting because the stock has finally started outperforming. So for a longish period of time, the stock went from 1100 to 1300, 300 odd levels. Then post-COVID, it has never been able to recover. Now we've started recovering. The last time the stock made a 730, it went down to sub 600, and now finally above 730, 750. But the fact is, what we see is in this move, there have been multiple days where there have been very large volume ticks. So this indicates finally a trend change, and this could slowly and steadily go up higher. A trading stop loss would now be placed at 770. In the short term, it's given a flag breakout today above 800. So positive on the stock, could go up towards 850 and then 900 also.
Okay, let's take a very quick break on that note. When we come back, we'll of course continue our market discussion with Sandip Sabharwal, Kunal Bothra and Naresh Mirani.
100 points up for the Nifty from the day's low, 17 points off from the day's high. Nothing very meaningful in terms of a trend, so to speak. Reliance is holding on, so that Jefferies report that Reliance is going to take Jio public very soon surely is not having impact on the market mood per se. Your TCS numbers later in the day, and then the whole earnings season will start. But the real big chunky move, I think, is happened in some of the railway stocks. I mean, RVNL, Concur, RNRL, some of these, they've seen a huge rally post the entire election verdict. That's IRFC for you, not big spikes today. But in general, this space has done extraordinarily well. Naresh, if you sell on railway stocks, you regret because they are going up. If you buy now, the fear is that they're looking overbought. What should one do?
So the fact is, when the whole railway stock started moving up a few years back, the top names were RITES and IRCON. And RVNL used to be a small name that's gone up the maximum. So if you still want to participate, RITES and IRCON still look interesting. RITES has gone nowhere for the last almost 6 months now. And also compared to what it was, even from say pre-COVID, stock was 350, today it is 700. So it's not got bonkers. So you still have ways to participate if you want to. It's just that they're not in momentum. IRCON, on the other hand, has gone up, but it has not gone up as massively as RVNL. So I would still go with RITES. That's a play which is still open in, say, railways, where the consolidation is done. The stock has not gone up crazily, and business is still very interesting according to people.
Point taken. So that's a move. That's a status check on some of these stocks which are buzzing around. Just flagging out the other buzzers in the trading session. IREDA is something that we should pull up. It's 13% higher right now. So, a sudden spike coming in on that counter. The earnings are expected, I think, this week itself or over the course of next 2 to 3 trading sessions. Actually, tomorrow itself, 12th July is the date when the earnings are going to be out. And just ahead of that, there's a huge spike on that counter. And it's not just a matter of today. Take a look since its listing. I mean, that stock has seen a massive rally.
35 rupees.
From 35 bucks to almost like 300 plus right now.
And this is not once upon a time listing. This
Very
was
Yeah,
a
less
very
than 6 months.
Yeah, last Diwali or last
Yeah,
October.
so
Let's look at it actually.
Yeah, let's pull up the longest available chart and see. So yeah, that's the
Wow.
kind of big move that we have seen on that one, up almost 300%.
So it's not like you're comparing it like a market stock which has gone up from COVID's low. See, COVID low, all the charts will look extraordinary.
obviously, yeah.
But this last year, 2023, the market was in a vibrant mode.
Correct.
PSUs were rediscovered.
Already
themes.
rediscovered to
So
a
I may
huge
look,
extent.
exactly. So I may look back at a Tesmaco intraday graph and say, okay, from COVID it is up 10x, 12x, whatever the price is. But that is from COVID low. Here we are talking about 2023 October when it went public. Sandeep, I don't know what is happening, and every time I don't know what is happening, I come to you.
So Nikunj, I think the easiest way, which might not be possible for you, is that you have to report everything. But stocks which you don't understand what's happening, you just remove from your screen and don't track them. So I don't track this stock. So you have shown me this I think after a long time, and I'm seeing the price after a long time.
By the way,
I don't know.
listed in November
December.
end.
Yeah, like
29
December, I
November
think, or yeah,
23.
Closer to
around
Diwali, that's what I remember. Just
Roughly
in and
around
around
that.
Diwali.
Correct. So what, 6-7 months and 7-8 months, and look at that stock. I mean, in hindsight, we can all say we should have probably used that opportunity. But I mean, Sandeep can have the liberty of probably not looking at some of the stocks. But Naresh, what about you? I know it's limited history to go by, but still, it's very, very tantalizing.
So it is better to pass, and it goes off the touch screen itself. So the simplest way is to forget it.
I don't know if it's a grapes are sour kind of situation for everyone, because I mean it's gone up by a huge extent. Everybody's saying that it's fine, just kind of remove it from the screen and move on. But every time that stock makes a move, it's difficult not to take notice.
Yeah, that's exactly what people who rubbished Zomato when it was around the 40, 50 odd levels must have said as well. But Sandeep, what about Trent? I mean, it's kind of those IREDA kind of stories. I mean, obviously it has a much longer trading history, but parabolic moves. No matter what, that stock continues to move from strength to strength.
And it's been backed by spectacular performance. So I think every quarter there are expectations which analysts have. And if you look at something like Trend, they just break through those expectations and deliver very strong numbers. And that's the reason the valuations have continued to trend higher and higher, because there's been no disappointment. And in fact, the result delivery has been much above expectations. So there's no reason for someone who is holding the stock to sell. And then there's no equity supply coming in, and new buyers coming in every time. So I think that's the status of Trend. So it is a stock one should buy. When one should buy, let's say there's some quarter where they actually disappoint, and then because of valuations, the stock comes off sharply. That will be the time to buy for new investors.
Taken the other big vertical which is reacting right now is every stock related to shipping. So Gujarat Pipavav, GE Shipping, Mazgaon Dock, all of these stocks are fairly active. And let me take it across to my colleague Prakash, who's joining in with that latest on the shipping, companies as to what the expectation is from budget. Because of course, we had seen that last year it was all about railways. This year, while railways is continuing to get a huge share of infrastructure spend, shipping might also find a big focus. Listen into what Prakash has to tell us.
Yes, we are learning from our sources that the government is likely to make some announcement for the shipping sector in the upcoming budget. We are given to understand that the shipping ministry has made certain recommendations to the Ministry of Finance for its consideration. As per the proposal submitted by the Ministry of Shipping, a special fund could be announced for the manufacturing of ships within the country, a very significant development coming in. Sources are informing that the Maritime Development Fund could be announced on the recommendation of Ministry of Shipping to incentivize domestic industry for the manufacturing of ships within the country. And that will also be in line with the government vision to become self-reliant in the shipping industry. In addition to that, sources are also informing that the shipping ministry has proposed providing an incentives for ships operating on green energy, and therefore Harit Nauka scheme could be announced for inland waterways. In addition to that, some special fund has also been sought to promote R&D in the shipping sector that has also been proposed by the shipping industry, and we are expecting that some of the proposals are going to be reflected in the forthcoming Indian budget. Back to you.
Right, okay, thanks for those details. That's what our sources are telling us, that the government is likely to make some announcement for the shipping sector in the budget. And sure enough, you can see most of these stocks on a tear. Actually, not just today. The run-up has been for the last fortnight. Most of these stocks, Mazgaon, Garden Reach, have all been holding out very well. Dredging Corp as well added to that list. Sandeep, anything within shipping that you're liking?
Shipping again falls in that the same category where the shipyards have huge visibility of growth, and they have new orders also coming in. But again, the retail frenzy and valuations are so high that we can't buy them now. But then again, on sharpish sell-offs of the overall market or the sector as a whole, this should obviously be a sector which should be in line to buy, but not at these valuations.
Sun Pharma, it's actually turning out to be a very decent week for pharma, decent month, so to speak. Sandeep, any acquisitions, anything which you bought, sold when you were on holiday? I'm sure the laptop and the phone was on.
No, nothing much actually. So just holding on to the old ones and not deploying anything as of now.
And which are the old ones? I think we've discussed names like, let's say, Voltas, Page Industries. Those were the ones we've discussed a couple of months ago with you.
Yeah, so among durables, like we bought into after Voltas ran up, I had also said on the channel we bought into V-Guard Industries, so that's done very well. We are still holding on to that stock, and nothing much beyond that actually. So
When you're
I
saying
think as
Sandeep, so when you're saying we're not deploying much, does it mean that you're just waiting for a correction to put more money to work, or you're just putting money into the same names that you had earlier?
for fresh money deployment, I would wait out a bit, see if the markets give a correction, even if it's a shallow correction, because we've seen that because whenever there is a small correction on the broader market, sometimes the sell-offs tend to be much bigger, and that can give opportunities. And at the start of the result season, it's always better to have some cash, because then in companies which could surprise on either side. So if a company has been doing badly and then there's a further negative surprise, but you think that this could be the bottom, then you can actually buy, or vice versa. So I think start of result season, it always makes sense to have some cash.
I want to bring up the charts of Sula Vineyards as well, considering that their Q1 update has been strong. The revenue from the own brands has seen an uptick of about almost 2.7%. Not much of an excitement on the stock. But Sandeep, the entire Alcobev space has done very, very well. Anything that you like and you still think is worthy of a buy?
Many of the stocks have moved up, but I think fundamentally the performance has not been that good on Sula. If you see, the growth was just 2-3% for this quarter for their core brands. Overall turnover growth was 10-odd%, but I think core brand growth was just 2-3%. So like the rest of the consumer discretionary space, on this segment also we are seeing slowdown. There are some specific companies who have been able to launch good, strong brands. They have done well sporadically. But overall, the sector volume growth is still under pressure.
Good to have you on the show. We'll let you go on that note.
If you like this video, then like, share and subscribe to ET Now.